money. We all love money, but sometimes when it comes to taxes, we don't get money and we get upset. But today, Michael Carlin is here from Wealth Management. He's going to help us out. We are spring cleaning our taxes.
We are.
We got to spring clean everything, including our taxes, Michael.
Yeah, we're going to bring the fun to taxes somehow.
Oh, I love that energy. We're going to bring the fun to taxes.
Yeah.
All right, so what should we be pulling all together throughout the year? Because some people wait to the last minute.
See, that's the thing. See, with money, what we try to promote every time we're here with clients is be organized all year long. It's hard, though. I know it's hard, but when information's coming to you, you're getting it in the mail. Track your expenses. We're going to talk a little bit more about what expenses to track, but this isn't something that you throw together now because you'll tend to forget it. So again, do it all year long. So
you should have like a separate place or an envelope or like a drawer where you can put everything and you say this is for taxes.
Yes. So if you've got like an online file, do it online, but segregate that stuff, put it somewhere so you don't lose it. Okay.
So what are we getting together? Because I know a lot of people have, school. Sometimes they do like side projects for someone and they have to calculate that money. So what are all the documents that we need to consider?
Okay, so first things first, let's deal with income.
Okay.
So when you're dealing with your income, you've got everything from wages for your job, investment income, you're getting the 1099s or K1s in certain cases for partnerships.
Right.
You're getting all of your real estate income. Whatever it is that you've got that's coming into the door for income, keep it, track it, Social Security, everything.
Okay.
So that's one thing. And even I want you to go as far as keep a track of your gambling winnings.
I wish I did have some gambling winnings.
I know,
that would be the best,
But then so gambling winnings and then gambling expenses because they offset.
Oh, okay.
Yeah,
that makes sense.
There's the yin and the yang, the good and the bad.
There's always the good and the bad. We want to hear the good, though, for 2017. All right, let's talk about if your situation changes midway through the year, like if you get a divorce or if you get married, how does that affect your taxes? Well,
so if you get a divorce, it's going to depend upon what your divorce decree states. It's going to tell you how it's going to handle your taxes for that year or years moving forward.
Okay.
So it's going to be unique to everybody. It's going to be something a little bit different.
But you do need to make sure you have everything in place because it does play a vital role.
And also in the expenses too. I mean, that's the thing that we got to talk about is that so you're not just tracking your income but your expenses.
Okay.
Things like medical expenses, keep track of all of them.
So if you did have like a major surgery or you had to get some prescriptions that you didn't expect throughout the year, you have to keep account of all of that.
Yes, and also if you're buying lots of big things, you get lots of sales tax, right? So if you're buying cars, you're buying big TV. If you moved into a new house, keep track of all your sales tax because you may be able to deduct your sales tax. Did you know that?
Oh, no, I didn't know that.
Deduct away.
So let's talk about independent contractors because there's a lot of those people that work from home. They're independent. They own their own business.
Yeah.
What do they need to have? Is there something different that they calculate versus someone that goes to a 9-to-5 and has an employer?
Yeah, there is. So when you own your own business, you have a lot more flexibility because you can deduct things that are related to that business. And the question is well, what's related to that business?
Right.
Right, and so you can get a little bit, more creative. You don't want to stretch it, but be more creative in terms of, well, these are business expenses and I need these to operate so I can deduct them off of my income. In some case, if you own your business. All
right, let's talk about finding the proper tax accountant because sometimes it's very hard because some people get stuck in a rut and they use the same person, but that person may not be up what they should be on all of the different things, especially if your life is really transitioning and changing. You kind of might need to get a new person.
So what I would love for everyone to have is someone who is working with someone that they're asking questions and they're digging deep. What you don't want is a relationship where you're just dumping a whole bunch of data and then they're giving you a return and you're signing it and then you don't really know what's happening. Work with somebody that you know understands you, understands your situation, and you're communicating, you have a good relationship with. That is an ideal tax situation.
And the number one thing too is if your tax person is always getting educated on what's changing in the laws, because sometimes you don't hear of them doing that, but if you have someone that says, yeah, I got a class I got to take, or I still have to get another certification because the laws change, then you know that person is up on it.
Be with someone that's in the know. Absolutely.
Well, let's talk about the refund. Understand there's some misconceptions with the refund. That's a good thing, isn't it?
I mean, my goodness. Have you seen the commercials where like the money's coming down from the ceiling?
Yes, they're like, I got a tax refund.
I know, and it's all, not good.
Wait, a refund is not good?
I'm saying not good. We don't want you having a refund. It basically means that throughout the course of the year, the government's taking more tax money from you than they needed to. And you're just getting it back.
Okay, so if you don't have that money taken out and you break even, then what are you doing with that money?
Then that is perfect.
Oh, no.
Okay, now hold on.
Okay, now tell me why. You got to explain why.
Okay, so this is now, in the amount of time it's going to be tough, but I'm going to try.
Okay, we got a minute.
So if you make a certain amount of money, you owe a certain amount of taxes, right? And if you're getting a refund, you pay the government too much in taxes throughout the course of that year. That's all. That's all.
Okay.
And if you prepare your taxes right, and if you're working with someone that does it right, the average refund was about $3,100.
Okay.
Right. If you look at what the IRS says, this is our average refund, and there are millions of people getting refunds.
Right.
Millions. If you have that money, that $3,100, rather than the government, and you had invested that money, and you'd earned a 7% rate of return over 20 years, it's more than $73,000 in your pocket, because it was in your pocket rather than the government's pocket. So I do not want you to have a refund check. I want you to
break even.
Break even. That's the new, that's the money coming down, the break even.
That's our new motto today. Break even. You want to break even and save
right.
yourself some headache and invest that money down the road so it's yours and not the government.
That's right.
Michael Carlin can set you straight. ManageTheFunds.com is where you need to go. Don't go anywhere. You're fantastic. Thank you so much. You made taxes fun. Who knew? We're going to be talking about our thermostat when we come back. We got Monica giving us some vital information.